Most people think their daily commute is just a sunk cost, a tax on time with zero tax benefit. But what if the IRS has been quietly leaving money on the table that you've been too busy driving past to pick up? We're talking about a legal strategy so overlooked that most business owners fund the government's budget instead of their own. And today we're pulling back the curtain on exactly how that happens. Now, let's be clear about where this started. A question came in from Canada. And while we respect our neighbors to the north, that's simply not our lane. Here in the United States, though, this is absolutely our lane, because we work with business owners across the country in 18 different industries, helping them legally outsmart the IRS every single day. Here's the uncomfortable truth most accountants won't say out loud. The IRS has always said your commute doesn't count. And for most people, that's completely correct. But most people is doing a lot of heavy lifting in that sentence. Because the moment your facts change, the rules change with them. Think of the tax code like a river. It flows in one direction for the average employee. But business owners can legally redirect that current if they build the right structure upstream. The strategy we're talking about isn't a loophole or a gray area. It's a two-part framework sitting right there in the code, waiting for someone to actually use it. The first piece is what we call the administrative home office. And no, this is not the same as claiming your couch because you answered one email from home last Tuesday. This is a properly documented, exclusively used workspace in your home where you conduct the administrative or management activities of your business. Think scheduling, billing, record keeping, and planning. When that home office qualifies under the IRS rules, something remarkable happens to your morning commute. It legally transforms from a personal expense into a business trip. The drive from a qualifying home office to your clinic, your job site, or your practice is now deductible mileage. And in 2025, the IRS standard mileage rate is 67 cents per mile, which adds up faster than most people realize. Now here's where it gets genuinely interesting, and where most strategies stop short. You layer on what's called an accountable plan. An accountable plan is a formal reimbursement arrangement between your business and yourself. And when it's structured correctly, your company reimburses you for those business miles, completely tax-free to you and fully deductible to the business. That is a double win, sitting inside a completely legal framework that has existed for decades. Let's be honest about the irony here. Millions of business owners are paying full personal taxes on income they then spend on driving to serve their own businesses, because nobody sat them down and explained these two words: administrative home office, accountable plan. The IRS isn't hiding this from you. They're just not sending a newsletter about it either. Now we have to pump the brakes for a moment, because this is where people get into trouble. You cannot retrofit this strategy over a messy fact pattern and expect it to survive scrutiny. The home office must be used regularly and exclusively for administration. The documentation must be clean, and the plan must be tailored to your specific situation, your specific business, and your specific state. Cookie cutter setups get cookie cutter results, and sometimes those results come with penalty notices. History tells us that the business owners who get wrecked in audits aren't usually the ones doing aggressive things. They're the ones doing legitimate things sloppily. Process matters more than the strategy itself. Documentation is the whole game. And the discipline to maintain records consistently throughout the year is what separates the deduction that sticks from the one that gets clawed back with interest. The skeptics in the room are probably thinking, this sounds too clean, too convenient. And honestly, that's a healthy instinct, because plenty of people have been sold strategies that were really just wishful thinking dressed in legal vocabulary. This one is different because it's grounded in actual code sections, actual IRS guidance, and decades of case law that has consistently upheld properly structured home office and accountable plan arrangements. What this really comes down to is a simple philosophical shift in how you see your business structure. Every dollar that flows through your life has a character, and with the right architecture, you get to influence what that character is. The business owners who build real wealth aren't necessarily making more money, they're making the same money leak less on the way to the bank. So the actionable takeaway is this: if you're a business owner driving to serve your business every day, and you don't have an administrative home office and an accountable plan in place, schedule a conversation with a qualified tax professional this week, not next quarter, this week. The mileage you drove yesterday is already gone. But tomorrow's miles are still on the table. Discipline in tax planning looks boring from the outside and feels like freedom from the inside. Because every deduction you legally capture is capital that stays inside your business instead of funding someone else's priorities. Size your strategies correctly, document consistently, and let the system work the way it was actually designed to work. Whether you're just starting to think about structuring your business properly, or you're ready to take the next step in building real financial infrastructure, we can help you get started, whether that's real estate investing, home contracting work, or finding the right lenders. So check out our links in the description below.